All right, everyone. So we're going to continue on here with Chapter 8, Setup 7, Daily Continuation. So again, this is a stock type or daily setup that we will often apply for to the momentum setups that we've already talked about. First pullback, ABCD pattern, half dollar, whole dollar, etc. So let me put this on the main screen here. And why don't we jump in? So daily continuation technically is a break of the previous day's high or the pre-market highs, depending on how we trade it. And a multi-day parabolic momentum is when we have essentially multiple back-to-back days where the stock just continues going higher and higher and higher and higher. So it keeps breaking the previous day's high and continuing. Now, in the case of RKDA here, this move right in this area is certainly continuation. First candle, and then continues into day two on higher volume. Now, sometimes the catalyst is actually on day one, right here. And on day two, it's not a fresh catalyst, it's just continuation. It's continued momentum. The stock continues higher. Perhaps people who are trying to swing trade it to the short side, you know, hoping it would do something like, I don't know, this stock here. Let me just pull this up. This is a stock that I traded today, but has a history of gapping and fading. And so the fact that it didn't do that today, you know, I was able to make some money on at 23,000, up 29,000 on the day. It sort of bucked its trend. And, you know, this one potentially, if tomorrow it gaps up a little bit and then breaks over 5, we would certainly be saying the break of $5 is continuation, a break of today's high, previous day's high. Then on this particular day right here, this day, it probably had a fresh catalyst, some type of fresh news that caused the gap and the squeeze. And then this day up here was continuation, break of the previous day's high. So continuing a little higher before rolling over. So we always have to be a little careful with continuation because typically continuation is not stocks that are moving on continuation are not on new catalysts. It's not like, you know, 3 days in a row we continue to see new headlines getting posted. Usually it's one headline, then just the momentum continues. So a continuation stock is an underlying condition for a stock to have, and I can trade any of the entry setups we've already discussed. It's important to understand stock types because, of course, some stock types can produce much better opportunities on the same technical entries than others. And so when you're looking at something like the half dollar, whole dollar break, and you're thinking, gosh, on this stock, the half dollar, whole dollar breaks worked so well. But then on this other stock, they're not working at all. And so what was different? And one of the things that may be different is sort of the daily setup. And sort of that's kind of part of the technical characteristic of the stock, that it's a blue sky pattern or it's a continuation. You can have continuation and blue sky going hand in hand. Of course, we could see a stock like the CCIV where on these days it's blue sky and continuation. It just keeps going higher and higher and higher. And given the fact that there is no daily resistance, that can sort of fuel that squeeze up. Recent IPO breakouts and continuation can also be hand in hand. You know, day 3, it's still a recent IPO breakout. It's also blue sky. It's also continuation. So, you know, these kind of all sometimes come together to create the perfect storm of parabolic move. And sometimes it is, so a second day of continuation is where the stock made a big move on the previous day in the previous trading session and then is continuing into the next day. Sometimes it is purely technical. There's no fundamental news on day 2. Now, typically the first day is based on a fundamental news catalyst, but sometimes even then, day 1 is not based on news. It's just, you know, a technical breakout, and then day 2 is a continuation of the technical breakout as people who are shorting a stock that's up 50% with no news start getting squeezed, and they're like, this doesn't make sense. Why is this now up a second day? There's still no news. But maybe someone with, you know, weaker hands, paper hands, have, you know, thrown in the towel short. And then if they start throwing in the towel on the short side, that creates a buying spike. And then more short sellers also start to give up. And then next thing you know, the short squeeze is off. And momentum traders we are so tuned to jump in what's moving and sometimes ask questions later. So it doesn't have a catalyst, but it's moving. And in fact, CTIB today, you'll notice this actually has no news. The stock was up. Let's see, the gain on it as of right now is 80%. There's no news on it. It doesn't make sense. And so it was logical then that at the open it sold off, and it was kind of irrational that it squeezed from 4 up to 5. But that created a little short squeeze, a spike of volume for traders that were swing trading it to the short side. And certainly if it broke over 5, it would be a continuation of a short squeeze. It doesn't make sense. The market sometimes does not make sense and can be irrational, the old saying, longer than you can remain solvent. So, you throw in the towel at some point. So these can be purely technical, but fundamental is usually preferred. Although, on the other hand, if some of the biggest moves come from traders getting stubborn and sort of refusing to give up, then in a way, the no news trades could actually be, perhaps some of the stronger ones, because they'll encourage traders to keep shorting and not give up because it doesn't make sense. But the market has this way sometimes of slapping us in the face, just like that. And it can be very painful. And it's a quick wake-up call. It doesn't make sense, but, well, what can you do? So, this is just, this is the reality. So you get that quick slap in the face sometimes by the market. Let's see. And that leads pretty quickly to what we usually would refer to as tears. Big tears. Really big tears in the shower. It's a hard life being a trader. Ups and downs. So we can't get stubborn. We have to cut our losses, and we have to, move on when things aren't working. So continuation setups can give way to multi-day parabolic moves because the stocks just start getting irrational, and then they keep going higher because they're up high, right? Now people are buying it because it's up. So former Momo stocks, once a stock has made a 100 to 200% intraday move, from that point forward, it will have former runner status, right? So anytime a former Momo stock starts to squeeze up, you're going to have more traders that inherently jump on it thinking maybe history is repeating itself. And history can repeat itself. And that certainly goes both ways. Stocks that have a history of gapping up and fading often will gap up and fade. Traders just expect that that's going to happen and get very cautious about it until that first time when it doesn't. And then the moment that pattern breaks is when, the people who are kind of settling in like, wow, this is easy. Every time this stock gaps up, I just short it. And it works until it doesn't. And then it's dramatic because all of a sudden you're getting a sort of a shakeup. So the history of making big moves is important because in the future, if the stock has breaking news, traders are much more likely to jump on it quickly, knowing the stock made this big move in the past. And maybe, I didn't fully capitalize on it as much as I could have. And so, if we see it starting to make a move in the future, I'm going to overcompensate having missed that move in the past. So, if after 6 to 12 months a former runner has a really bad chart, then, or it's had several days where it popped up and faded, then that sort of replaces its history of being a big Momo stock, and it sort of starts to have a history of just being something that gaps and fails. So former runner status isn't forever. You could have something that was a former Momo stock at one point and is now just a difficult stock to trade. And actually GLBS, you could probably say, is one of them. GLBS is a stock, it's a shipping stock that, we've got to go back a couple years on this. It's had reverse splits, as you can see. It's had histories like right back here where it made a huge move. And then this move here on this day, that was sort of a former Momo type of move where, it's got a big move here and then a pretty nice bounce in this area. And then on this day, it kind of pops up and traders jump on it quickly. They jump on it pretty quickly on this day here and this day as well. These days a little less so. And then you start getting into these days where it gaps and fades, gaps and fades. So now you're kind of losing that former kind of Momo stock history. You know, it does it a couple more times, sort of these squeezes, and then starts to fade again. So, you know, they can kind of go in and out of favor among traders. So, so that was LE. Oh, that well, LEDS is one as well. So GLBS is one, and LEDS is another. LEDS, a little bit of a move here, bigger red candles on some of these recent days. But if we go back a little ways, you'll see a period of kind of gapping and fading, gapping and fading. So this one kind of goes in and out of favor. At one point, it had made, you know, a couple of really crazy, huge moves. And then it started to, maybe it was in this area here. And then it started to get a little choppy. This was a big move here. Maybe that was it. After the reverse split, kind of pops up, then big squeeze there from 2 to 11. And then another big one there, another big one there, and then red candle there, gap and fade, a big rejection here, and then a couple days where it gaps and sells off. And then just recently kind of coming back in a little bit to more momentum. So here's an example of a continuation, multi-day squeeze here on eyes. So first day here, you get that kind of quick pop from 440 up to 540, 560, $1 a share. Nice 20% pop on a lower price stock. Consolidates and kind of holds its gains all afternoon. It holds above the volume weight average price and into the close is strong. When they're strong into the close, that can be an early indicator of a possible gap up the next day. While there might be some people with a risk tolerance to try to swing trade that, the problem is you'd be buying something for an overnight hold that is up, you know, significantly from the previous day. You would definitely want to check to make sure you don't have a risk of a secondary offering coming overnight. That was something actually that we had this morning on TAOP. So that's definitely a risk with continuation setups. TAOP, strong yesterday, pulls back a little into the close, gaps up pre-market, double topping. And pre-market, I was thinking, boy, this could be, you know, consolidation in this area. That's the cup. This is your coffee line. That's a little cube of sugar right down there at the bottom. And this is the handle. Okay, so break through that level, flat top over 1440. Right here, news came out, secondary offering, 7.75 private placement. So that's not uncommon that we will see stuff like that. CCIV, I'm not sure what caused that drop here on this one, but since it's a special acquisition company, it might be something else. But in any case, that's a risk factor with going for the swing trade, but still strong into the close, at the very least, will be something that I'll be watching the next morning. So usually when I shut down my computer, well, this is a trading computer only, so I actually don't shut it down every night, but usually when I do shut it down, or when I close my charts, I leave the stocks up that, of course, I was just were the last ones I was watching. So then the next morning when I load it, it loads back to those same charts because I saved my layout. And then that gives me a reminder, okay, so the first thing I do when I sat down this morning was I saw TAOP. It was the last one I looked at. It was the first one I look at in the morning. So then I'm asking myself, is this a continuation setup? And I thought it might have been. So eyes here is a continuation setup. It is gapping, second day continuation. It's probably a light volume gap. There's probably not a fresh catalyst, but it's continuation. And then we have to, of course, check our daily chart. How strong or weak is the daily chart? Does that sort of support us continuing to trade it here? Or is it giving us a red flag? Are we running into the 200 moving average, or do we still have room to go? So we do our daily chart analysis. And then in this case, we got a nice gap and go trade, break at the pre-market high. So being knowledgeable about continuation setup and that potentially being the pattern is important for gap and go trading, because it helps you understand, okay, the stock is gapping up, no news, what's going on? It's a continuation from the previous day. So we do get some nice continuation trades on this, and it closes strong, which I don't recall, but could have led into a third day of continuation, potentially. So this is a continuation over the course of several days on BPTH. very similar to RKDA. This one actually popped up with no news, then it fades, then it gaps up and the short squeeze begins. It closes strong here, relatively strong. Next day, it's gapping higher, and that's when the real squeeze began, as it broke through that 200 moving average. This one was a recent reverse split, as we know. We did have the 200 moving average as a little bit of an issue. It was a no news stock, which is why that one big firm took a 800,000 share short position on it, which is kind of crazy considering it only had 4 million shares of volume on this day. Is that 40? Hold on. No, actually it's 40 million shares of volume. I wish they would have commas here. So, but in any case, it's still a large position. And then we got that big squeeze. So that was continuation. No real fundamental catalyst, just technical short squeeze. GMPX. First day here is a gap. Not really strong on a gap and go, particularly. It pulls back a little, but through the day it grinds higher, closes at the high. And so, again, potentially high risk swing trade, entering there or into the close for a gap and go into the next morning. Continues up here, pulls back a little bit, flat top right there at 320, and it breaks through that level and surges all the way up to 580. So that's where you got that really nice continuation on this one. First pullback, nice entry. So this would have been a gap and go trade, probably no fresh catalyst beyond what was on the previous day, but strong, continuing into the next day. Here's one that is, I believe, an IPO. So no price action, begins trading right here and squeezes up into a halt. Consolidation, halts up again. Consolidation, rips up again. So really strong into the close. Now, sometimes when these are really strong into the close, after hours, they sort of explode. Sava is actually a recent example of this. So this stock here, this used to be a cheaper stock, but it's just kind of kept going higher and higher. So this one was a couple days of continuation, really, if we look at the daily chart. So this is our daily chart on Sava. We had news, continuation right there. So news on this day then continues into the next day. So this was the day with the news right here. So, you get the gap and go, but it's a higher price stock, so, whatever. But it does do a gap and go. It does end up working. Hits a high of $75, pulls back after hours, sort of because it pulled back into the close, it was a little bit sort of lighter after hours on volume, not a lot of volume. But then in this area, did hold the volume weighted average price, and, it looks interesting. Girl, go lay down. Go on, go lay down. 64.50 breaks the pre-market sort of pivot. Go lay down, girl. Squeezes up to 71, pulls back 68, then rips into the afternoon. And watch, this is going to close into the afternoon at the highs. So where's the close? So that right there is the close. It closes at $90 at the highs. Now remember, after hours, if you were short this stock, and then you see it's going into the close really strong, you may want to unwind the position before the close, because once the market closes, volume drops. So this was the volume in the 5-minute candle before the close, and after the close, you have the lowest volume basically of the day since back to pre-market. We don't have the same algos that are running pre-market. A lot of market makers go offline, volume decreases. And in this case, with less sellers on the ask, and I suppose, sorry on the volume. I'll just put my video there. And I suppose less buyers on the bid as well, but with just less traders in general, and in this case, a bit of a buy imbalance, traders are able to buy and it rips. Look at this, 100. Whoa, here we go. This is when things can start to get exciting, right? I mean, this is impressive stuff. So we go up to 130, up to 140. Now this is actually pre-market the next day at 4 a.m. And then it starts to roll over as it comes in with more volume. So what's interesting here is volume is declining, the move is increasing. There's just no sellers. And then when volume kind of picks back up, it ends up coming back to not being a huge gap. But that definitely is a reminder that there are some opportunities pre-market and after hours. Pre-market when you have a stock that's really strong, and after hours when you have a stock that's closing really strong. All right, so we'll move this back up here. Okay, so that was the same case with MNPR. So it closes strong. Doesn't really continue after hours. It looks like the first day was probably on lighter volume anyways, but then second day breaks 27 and rips up to $44, which is impressive. WNT here, this one strong into the close, continues a little bit after hours on light volume, and then as soon as the bell rings, boom, off it goes right there from $19 to $24. Continuation. SRNE, this is another one that's a continuation setup. So strong move here on day one, gap and go, kind of a red to green move, consolidation. This is a bear trap. It breaks the volume weighted average price, then gets right back above it and squeezes higher. Consolidation into after hours, sort of just declines. Probably no reason that anyone's going to be aggressively buying it after hours. It's still below this level, but above this level. So just kind of sideways. And then pre-market, you know, it gaps up. And why it all of a sudden at 4 a.m. gaps and surges this much between 4 a.m. and 7 a.m., you know, I don't really know. Could it be traders in a different part of the world that trade the U.S. market regularly from 4 a.m. to 7 a.m.? I don't know. I'm just not really sure exactly what causes that. But, you know, once it starts, then that can, again, traders continue to jump on and pullbacks get bought up. But then in this case, by the bell, it was kind of rolling over. Here's another example of a big move. Second day, gaps a little higher and squeezes all the way to $57, spiking, parabolic, halts going up, but then rolls over pretty hard. This could have given us, looks like a little bit of a dead cat bounce because it closed down here, but then actually was gapping up pre-market. So whether the bounce started after hours or was pre-market, I'm not sure, but it did bounce up a bit and then sold off again. Here's another one, or this is, let's see, which, no, I'm not sure. This is AQXP. Was this a different time period? Yeah, this is a different time period. So I don't know if this was really super continuation. It's kind of hard to tell because can't really see a lot there. So I'm going to just go in and change this slide actually. And it looks like I duplicated it as well. So hold on, let me move this out of the way. So this is slide, okay, 58. So I can't tell. I'm going to pop this one out because I can't tell really what we're working with there. So I'm just going to skip that one. GBR daily chart, first day, gaps up and sells off. Okay. But then second day, it rips all the way back and closes green. What? That doesn't make sense. Well, that's what it did. Next day, it gaps higher and continues all the way up to $14, $12, $13, $14. Then opens and sells off. So kind of a wild move. This is a little bit of a bear trap. ETRM, three days of continuation, 4 days, and then on the fourth day, it reverses. This was a sort of big move, kind of like the other one where initially you have the gap and the sell-off. Next day it opens higher. Anyone who is swinging it to the short side, squeezed out as it goes long. Next day opens higher, surges up. Then it dips here, sells off. Then off that, you get sort of this dead cat bounce that ends up squeezing up. And the next day it opens way back up here at 42. So you're talking about a range of $2 to $47. It's pretty crazy. Lakeland Industries makes biohazard suits. So during the Ebola crisis, this was in 2015, share price went up dramatically. Good for business for them. So the headline, anytime there was a headline of Ebola, you know, new, whatever it was, you know, new case or this and that, all of a sudden, you know, it was just like the stock would immediately pop. So we had this squeeze here in multi-day continuation from 10 up to $30, which at the time was a pretty impressive move in 2015. This also resulted in some sympathy momentum on a few other stocks that also were in that space of making, you know, sort of industrial protective equipment and stuff like that. DGLY surging up during the police shootings and protests in 2014 in Ferguson. There was a rumor that all police officers may be required to wear body cameras. DGLY, Digital Ally, maker here of body cameras. Taser also does as well, but that stock didn't move as quickly. So DGLY, this goes from $4 to $34, multi-day continuation. The catalyst and the sort of, political talk and everything was about whether or not this would happen, and so that got that stock going. Eyes Medical Company performed one of the first human eye transplants. Impressive. So from $9 up to $19. Pulls back, continues, pulls back, continues. Not the absolute cleanest. This is again 2015. These are some older ones, and you can see how the momentum in those days was a little bit more subdued. It certainly wasn't what we would see today. VLTC surged up on news of a billionaire investor taking a large stake. This resulted in speculation about why he made the investment, and traders scrambled to get a piece of the action. And this goes from $3 up to $5, pulls back very nicely on the daily chart, then from 5 up to 6, pulls back nicely from 6 to 8 to 9, pulls back nicely, squeezes up through 10, and then this right here is that sort of capitulation day of those fireworks, that straight up kind of price action from 12 up to $19, continuing the next day, gapping up, squeezing up to 22 before finally topping out and beginning its retreat. UONE experienced parabolic momentum during a period where Black founder CEO companies were very popular. It was during Black Lives Matter type of thing that was happening, and this was the first time that had also carried over into the stock market, because the Black Lives Matter had been that wasn't new. I mean, that's been around for years, that people have had those stickers and have been protesting for equal treatment, especially with police officers and everything else. But all of a sudden last year we had a bigger event that really shook up the country, and out of that, UONE and there were a couple other companies all of a sudden started to take off. And I think that also speaks to the retail trading interest that was peaking last year, with retail traders on Reddit and with Robinhood, and saying, okay, let's vote with our money. Let's all buy this Black owned or Black founder, Black CEO type of stock. And so this one went from $250 up to $55 a share. It was, and really almost straight up in 2 days. This was really impressive. It pulls back and then it continues right there. Carve, same catalyst, same type of thing. This one pre-market was super strong, and then continues during regular hours from 16 to 22 before reversing on the same day. So this one was a little bit more of a sympathy to UONE, and it didn't hold up as well. WIMI, WIMI, this is just a continuation stock, strong in the first day, closing strong, then leads to strong after hours price action, pulls back, and then rips here pre-market super early, 4 a.m., and then starts retreating. At the open, bounces, pulls back, and does try to retest those levels, but this early huge move kind of screws up the chart. If this hadn't happened, then we would have been looking, to pre-market high around here, and that would have been much stronger. But because the pre-market high was up there, it sort of creates a little bit of, bearishness. COHN, this is another one, squeeze here from $6 up to 22, and then a strong pullback, but I mean an incredible move straight up, traders scrambling to jump on it. So it sort of consolidates here, and then through here this becomes sort of a daily breakout as it breaks out right there. VLRX, multi-day continuation, strong, pulls back, closes high, gapping up, then opens a little lower in pre-market. Not sure why, but then red to green surges as we squeeze, let's see, there we go, as we squeeze up at the open on the gap and go trade. Continuation in multi-day parabolic momentum here. So there's the entry at 420, strong afternoon, closes strong. The next morning, basically break of the previous day's high is sort of the catalyst or the setup, although an early entry could have been at the half dollar or the whole dollar, in this case of along at 4, squeezes up to 540. CHEK, another one strong in the afternoon. Not really a gapper here, just maybe news came out or just sort of starts to pick up. Squeezes up to 780. Consolidates afternoon, after hours, pre-market. Break of 780 is the clear flat top breakout. It breaks and goes up to 9. Drops down hard, and then in the late morning, break of VWAP, halts going up, opens higher and surges. So this trapped short sellers, I would say, in this type of spot. It, rejected hard, looked maybe like it was just going to fade the rest of the day. So short positions were taken, and then all of a sudden, whoom, just like that, rips up. LEDS, so multi-day continuation, day 1 from 3 up to 5. Second day, closing relatively strong. That's a pivot, breaks that level, breaks the previous day. Can't really continue a lot higher, but it does look good. Now, some of these would be, so this might not be on the gap scanner because it's gapping up less than 5%. Some of them will and some of them will not, which is why it is helpful to be able to kind of check in with folks in the chat room and say, hey, is there anything I missed yesterday that was really strong that I should be looking at for continuation, right? Because it's certainly possible that there could be continuation setups that you missed just because, they're not on the gap scanners and you didn't notice it. CHEK, right? So we looked at that. LEDS, cone. So let's see. Yeah, right. So cone right here, this one, sort of a quick move right here on light volume from 450 up to 750. Drops kind of hard, but then the next morning starts to pop up, pulls back, and rips up to 10. So this one ended up giving us continuation, especially significantly as it broke through the previous day's high. Now, if it doesn't break through the previous day's high and it doesn't break the previous day's low, then it's an inside candle. I will sometimes trade an inside candle on a stock that was parabolic in the previous day because that inside candle will have so much range. But if the stock wasn't parabolic in the previous day, then the inside day is not really worth looking at. SLS, strong, gap and go. Again, this one kind of traps short sellers here. It fails, then it rips up and halts once, twice, 3 times, and goes from 6 up to 10. Pulls back, gets bought up, drops back down, pops up, and then sideways. I mean, you can see examples of these patterns over the course of years and years and years and years. So it's never a better time for you guys to start learning than today, because I don't have any reason to think that we won't continue to see these types of setups for years to come. A little bit of a funny kind of almost head and shoulders pattern here, a strange one, but with that sort of big move. But in any case, closes after hours strong, and then pre-market is gapping back up, and then we're looking at the previous day's high as the breakout spot. WNT here, is this the same one that we looked at before? I know we had one on WNT, but I don't remember if it looked like that. Let's see. Looking back here at this for 1 second. Yeah, actually it's the same setup. Okay. Yep, so I already talked about that one. Missed. Strong gap and go, continuation. Strong during the day, sells off after hours. Actually does an inverse head and shoulders pattern here. Head, shoulders, and then back up. And then pulls back a little bit through after hours. It's kind of choppy, then starts to stair step back up. At the open, it sells off. And then afternoon squeezes up, but then sells off. So a choppier one in this particular instance. UONE, again, showing you that multi-day continuation on this one, which we already looked at, but just continuing higher. You can see the pre-market after hours, sort of flatlining after hours, ends up selling off on this day, but then bouncing back up on this day, and then continuing really strongly pre-market here as it's going through the all-time highs. All right, so let's look at some live examples here on a few of these. Let's see. So, and I'm just going to move that UONE trade stock back up next to the other one. Okay, there we go. So those are together. All right, so we're going to look at RKDA and continuation. All right, so copy this link, copy. Okay. All right, close that. Okay, so let's get oriented here and see what we've got. So let's see. So it looks like it's 928. Oh, it's okay. All right. So RKDA so far has basically no volume. It's gapping down 3%. You know, but then that's our context. It was strong in the previous day. And it's a recent reverse split, right? So we see this chart. Yes, it's a recent reverse split. Yes, yesterday was a strong breakout on high volume. If it breaks over 11, now it might not, but if it does, that's a critical spot. That's where a short seller would probably stop out. So that's where we may see more volume come in. Now, at this spot right here, the volume is very light, and that can sometimes be the case with continuation stocks because they're not on the gap scanner. So they're not gapping up. They don't have a fresh catalyst. So they may not be something that traders are looking at first thing this morning. But if it starts to squeeze and it hits scanners, then people are going to pull it up and they're going to recognize, oh, wait, this is that stock that was on the scanners yesterday. This is a continuation. It was strong yesterday. Maybe we'll get something today. All right, so we're coming in here with about a minute to the bell. So there's the open. And initially, $10 by 10.75. Not really a whole lot going on yet. Big spreads on it. And this is a day where I don't really have anything that I'm in right at the open, or that I'm buying right at the open for a gap and go. SRAX, it looks like I kind of had on watch, but doesn't look like it's doing too much. So it pops up a little bit there. Still light volume on RKDA, but all things considered, it's holding up. So we'll be looking for the green on the tape. CPAH popping up to the whole dollar of 4. Notice this is starting to creep up a little bit. 70 on the ask, 58 on the bid. Now look at that, there's some green. Okay, so, you know, this is one that I had on watch because of the previous day. So now I'm going to look to jump in it right here. And I only got a partial fill at 11.90 and then 10 shares at 11. And the spread is bigger. But if it breaks 11, the whole dollar, and then breaks the previous day's high, now we've got some momentum. So my order's on the bid there at 11. It starts to pop up a little bit more. So this is now going to be hitting high-a-day scanners as it's a stock hitting new highs. Yesterday, it went from 8 to 10 very quickly, also on lighter volume. I would say a lighter volume stock like this inherently does carry more risk. But on the other hand, these ones can make some pretty big moves, especially if there's someone that is swing trading it short that starts to get squeezed out and is forced to cover. That's what then fuels the squeeze. So essentially what I'm looking for is more volume to come in. I've got 1,000 shares. All right. Now, could I buy on it? To be honest, today, I don't think I would trade this because I now am trading with so much more size. I mean, I'm trading with my biggest position today was 55,000 shares. So I can't buy 55,000 shares when there's only 31,000 shares of volume. I mean, I could just keep pressing the buy button and I would get filled, but I would most likely get a lot of slippage on that fill. So I'd have to be incredibly confident in it. And generally, it probably wouldn't make sense to do that. So today, I would probably wait for more volume to come into it before taking the trade. And so right now, if I saw this, I would probably see, okay, this just popped from 10.50 to 12. That's good. Now, will we get some more volume on this? Will the volume pick up? Will it start to go exponential or go parabolic? And then as the volume increases, then I could buy the first pullback. So in this case, I'm looking for a trade over 12. It's holding up decently well. There's a little volume there. And look at that, from 12 to 1240. Look at how fast that breaks out. Then 1230. Now, if it breaks, now all of a sudden the spread is tightened up. Okay? So now if it breaks, look at that, 1244. The next up is 1296. There's 1319. There's 1240. Okay, so this is how fast these can move. And you'll sometimes notice on the gap scanners that we'll see a stock that's gapping up, 19, 20, 30, 40, even 100% on only 100,000 shares of volume. Or some of the examples that I showed you even just yesterday, like LTR PB, on the day that it made its really big crazy move. It actually made a move the other day as well. But on this day right here, this stock went from $5 to $135 on 360,000 shares of volume. So while on the one hand, low volume increases risk, on the other hand, sometimes it is stocks that have lighter volume that will start to make really big moves. So the question then is, can I manage the risk? And this one, the primary setup was second day continuation. Second day continuation on a stock that is a former Momo stock that made a big move in the previous day, bordering on parabolic, going from 6 to about 12. It's 100% in one day. It made sense to be watching it closely. And this was also a few years ago. In today's market, we are just seeing higher volume across the board. So this same stock in today's market would probably already have 500,000 shares of volume. I mean, 10 times the volume on an average trade or an average stock is not uncommon today versus what we had seen a few years ago. All right, so let's see what this does. All right, so at this point, we're still waiting for a proper 1 minute micro pullback. If I wasn't already in, I'm waiting for a pullback. Yes, bigger spreads. 45 by 75. Now, the previous day's volume, for what's worth, was 1 million shares. So the stock went up 100% in the previous day on only 1 million shares of volume. And that was the whole day. So right now we have 5% of the previous day's volume, and it's only 933. So we may see a higher volume day again today. So look at this. There's 13, 19. And at this point, I'm just holding it. There's 1322. 1319 by 22. So the bid is kind of jumping up a little bit. 22 by 32, 37, 50, 62, 61, 85. And I take a little off the table there at 1385 for nearly $3 a share. There's 1443. 1443 LULD, halt level, coming up right here. And now we're coming up to 100,000 shares of volume. Volume, no doubt, will increase like this as a stock, typically as a stock is moving up and it's hitting high day momentum scanners and more traders are noticing it, volume will increase. There will be times where we will see the divergence where volume decreases as the stock goes higher, but that's typically once we get into the halt territory and we're having a situation of halting and then opening high, gapping higher, and then squeezing, that volume can start to decline. So I'm still holding 253 shares at 1090. That's 14 on the bid. We still haven't actually had a proper 1 minute pullback. Of course, a 1 minute pullback on this could be dramatic. Dip trades, there could be a dip trade right here at 14. If I saw green on the tape in this area, I would probably do the dip trade for a quick dip and then a squeeze back to the halt level. So right there, you see the green at 14. So someone else was thinking that same thing. Dip trade, adding probably at 14. CPAH is on a 1 minute micro pullback. That's this stock here, also light volume. And it looks like I bought that at 21, which was a good fill right before it pops through that level. The 1 minute micro pullback right there, first 1 minute candle to make a new high. So now over here on RKDA, it's 1498. So now, I'm in two trades at once. Look at that. That hit a high of 1498. So there's 1480. This is really the one I should be focusing on though, because it's up more, it's got more volume. There's 1534. So 31 by 74, bigger spreads. 1598. So CPAH hit a high of 440, but then dips back down here, 13 by 20. RKDA has a high of 16. There's 16 on the ask. 1620. 1682. Volume increasing here. So that dip trade down at 14 would have been beautiful. 1676. Putting orders to take a little off the table on CPAH on the ask. Sold it actually on the bid. I didn't get filled, so I was back out. So small winner on that one. And now RKDA, I'm still holding. Smaller size on. Of course, the spreads are bigger. So let's see. I don't remember. Okay, so right down here, looks like we get a dip, and then first 1 minute candle to make a new high. So let's watch this for a second. Let's see if there's a dip entry on this. So it's selling off right now. Our 5 minute candle has 2 minutes left right here at 9:40. It's currently high volume and sort of going back and forth between being red and green. Currently looks like possibly a topping tail. High is 1682. There's some green. 1488. This candle still has 30 seconds left, so it's not going to be a first 1 minute candle to make a new high just yet. And the easiest way to mitigate a trade like this, the risk, is to trade with smaller size, which I certainly did. Back over 16, potentially. First 1 minute candle to make a new high. It wouldn't be a dip trade, but it would be a trade kind of at the apex. Hey, girl, come here. Come here. Outside. Go on. Outside, girl. Outside. Out. Out, out. So there, it's coming back up to 88. Nice. So at this point, I kind of missed the dip trade. There's 1611, 1620. It made the new high, but in this case, it's a big red candle, then a big green candle. Those are hard ones to trade. Let's see. All right, so 16. So again, you know, kind of just did a little teeny false breakout right there, and then so it's getting a little tricky. So sold the rest at 14, and that might be the end of that trade. I don't remember if we got anything else. 440 CPAH. So RKDA kind of tries one more time to pop up. The 5 minute is starting to set up maybe a 5 minute bull flag, which could be a long back over 16, but now we have almost 1 million shares of volume, so volume is certainly increased, but no, it looks like that's about it, at least for this video. Okay, so that's one example of a continuation trade. You'll see certainly more examples, and you've, I'm sure, already seen instances or examples of trades that were continuation in sort of underlying stock condition, but you may not have realized it yet. All right, so with that, we're going to continue on to the next section, daily stock type daily setup, intraday parabolic squeezes.